These are 12 commonly used insurance terms that you've probably heard but didn't fully understand. Insurance can be complicated, usually because of the language. In this video, I want to slow down and help explain these words so that you can understand them and simplify the insurance process. Hey, I'm Sterling, and I work in commercial insurance. In my day-to-day, I work with business owners on claims, coverages, and common mistakes that are usually avoidable. Today, we're going to be talking about these 12 common terms that are used in the insurance industry all the time and help you understand what they actually mean. The first word is risk. Now, risk can be anything that causes a loss. And it doesn't matter whether you're insured or not. Insurance doesn't create risks, it helps manage it. This could be things from weather, accidents, slips, trips, and falls, equipment, you name it. You may hear the word exposure thrown around quite a bit. This is where that risk shows up. It could be from vehicles, employees, the locations that you're in, your type of operations. The more exposure, the more potential to have a loss. For example, if I only drove my car a few times a year, I might have less chance of getting into an accident. This would mean I have less exposure than somebody who is driving a lot more often. The same thing could be your operations. If you are somebody that's a roofer, you may have more of an exposure of a property damage versus somebody who's just coming in and doing some finished trim work. Now that's a different case and it may vary from person to person, but that might help you understand a little bit more of what that exposure actually means. You may hear that word exposure used when it comes to rating your policy. That could be related to the amount of payroll that you have, the amount of gross sales that your company's generating. This is all because if you have more sales or more payroll, that means your operations are bigger and therefore you have more risk or more exposure. Another commonly used word is peril. Peril is what causes or triggers the loss. This could be the event like fire, theft, collision in an accident, a hail damage. It could be somebody slipping and falling or not doing something properly and causing a leak. These are all perils. You've heard me use the word loss quite a bit. Loss is the actual damage or injury after a peril. It's not the risk itself, it's the result of the risk. Now, claims only happen after a loss. Next, we're going to talk about some financial terms that come up a lot in insurance. The first one is premium. Now, premium is what you pay in the form of money to an insurer to transfer your risk. It's basically saying, I will pay you X number of dollars to protect me in case we have a peril happen to us. It's not a savings. It's not a deposit. It's a price that reflects those exposures that you have in your business. The next word is deductible. Insurance is a form of transferring risk from your business to an insurance company who can afford to pay when a big catastrophe happens. A deductible is the portion that you retain, saying that you're willing to pay the first X number of dollars before the insurance company comes in. The insurance responds after that deductible is paid. A higher deductible, meaning you're willing to take upon more risk for yourself, means that you'll probably have lower premiums because you're responsible for the first bit. One word that gets thrown around a lot is the word carrier. Now, carrier is just referring to the insurance company who you are paying premiums to that will pay out in the event of a loss or a claim. You are paying your premium, they pay the claim, and they're the ones that also set the rules that you agree to when you enter into a contract. That carrier is not the broker, another commonly used word. A broker is the middleman who represents the carrier and shops the insurance markets. So you might have several different carriers that are a good fit for your business. Your broker is that middleman that tells your story to those insurance companies. They help structure coverage and tailor them to your unique risks and challenges. Another person that plays an integral part of this whole process is an underwriter. An underwriter works directly for the insurance carrier. They decide if your risk is acceptable to what that carrier's appetite is. They're the ones that set terms and pricing based on the exposures that your business may have. We're wrapping up now. The next word is very common. It's policy. What is the policy? That is the contract or the agreement that you enter into with the insurance carrier. It defines where coverage is and isn't, and it's not just a summary, it's the legal document that you enter into. The next word is endorsement. Especially if you've been in insurance for a while or had a policy, you may have heard this word. An endorsement is a change to the original policy. It can add or remove coverage, and it's going to override the original wording that's in the policy. Many times, if you add a new vehicle or change the operations of your business, that policy will get an endorsement to update it. And finally, the opposite is an exclusion. An exclusion is something that is not covered. It is just as important and maybe even more important than what is covered. This is often where the surprises come from. People think something's covered, come to find out it's completely excluded. And this is where you need a good advisor to help determine if the policy covers what your unique business does. Now, insurance gets confusing when the language isn't clear. Once you understand these terms, policies stop feeling so mysterious and confusing and start to feel more manageable. If you have other terms or words that you hear all the time and want to understand better, drop those below in the comments. I'd love to answer those and help make your life a little bit easier. Then stay tuned because from here on out, we're going to talk about specific coverages and real life stories to help show how it all comes together.